Welcome everyone to the Kendall Report. This is the closest I've been to on time all week. I apologize. As you know, if you're following me on Twitter, I did a little survey today. I've decided to start at 10 o'clock next week. And just so you know, I'm a primary caregiver for a family member that's going through some really tough times at the moment. So this is why I'm moving the time. So just got to adapt to life sometimes. And I've got a lot going on. So let's get into tonight. I titled this, Will the Vigilantes Destroy the Regional Banks? And I have to tell you something, folks. I am, without going into a rage. I'm tired of hearing about this banking situation, mainly because if you start to look at the real fundamentals, there are some issues out there. This whole BS dialogue around uninsured assets, whoever came up with that was already short the banks, and boy, that's like the whole narrative now. People talking about we need to insure all the banks. If you want to live in a socialist country, then go live in a socialist country, because that's what you're asking for, the government to back up everything we do. It's the nanny state. And I'm going to be careful here tonight because I could get into some very deep areas. And the realities are the banking system's always been based on trust. Every business is based on trust. Your doctor's based on trust. Everything's based on trust. But unfortunately, due to our social media, including this platform we're on here, is nobody trusts anything anymore. And I think that's what we're seeing here, if anything. And the flows have started to already flatten out as far as all these crazy flows going. But the Vigilantes, man, they get a story, like PacWest, and they just jump on it and hammer it down. Anybody that's got any problems, they're just hammering them down. I saw somebody, I think it was Todd, made a comment here before I came on that maybe there's some opportunities in regional banks. So maybe just to flatten this out, when we get done with tonight, maybe at the very end, if you will spend to the end, if you're watching, we'll go through and I'll let you folks give me some banks that you've been watching, and maybe we'll do 4 or 5 banks at the end of tonight's stream. How's that? This is the stream for Friday. But I tell you that there is a lot, talk about fake news and things that are going on from the standpoint of these stories that are being conjured up. I was on a space a little bit ago. Everybody's an effing bank specialist now. Everybody, they're all experts. Everybody's an expert. I'm not an expert on this. I talked to Dr. Jim Baker this afternoon. We've been collaborating a lot lately. And there's somebody was talking about a classic asset management, which is a mismatch of assets, right? Lending, getting money and lending short and lending long. I'm sorry, borrowing short and lending long. That's a classic, right? Well, Jim Baker wrote that book, literally. Just look it up. And, this is really kind of a interesting situation we're in. We're not 2008. We're not in the next banking crisis. I see people putting videos out, and all they're doing is perpetuating this crazy mess here. And I'm trying to keep my words straight here right now, because there's a lot of things I could say. And I just tell you that there are some opportunities. There's some really good banks that are getting hammered down because they're a bank. And the financial sector, I went through this a while back. I'm not going to do it tonight. We'll see what happens over the weekend and see if we can just see how things shore up on Friday's close. We got employment, a whole bunch of stuff coming out. But just let me finish that this whole situation that we're seeing here is mostly in people's minds, and I guarantee, I know somebody I talked to earlier today, they were going around and see if they could short any of these stocks. That Pacific West, there was no stock to borrow anywhere. So every share that can be borrowed and shorted has been borrowed and shorted. And I suspect this is the case with a lot of these banks. And I wouldn't be surprised if there's some naked shorts somewhere out there, right? So it's not the people that own these stocks necessarily that have sold them. Maybe they've already sold them, but it's all of these other folks. So a little bit of a sliver of research that I've done. This is, what I believe is going on. And, and it would be interesting to see maybe if maybe Wall Street bet, maybe it's time for a short squeeze here, right? We talk about short squeeze opportunities. Boy, they are abundant in this sector. So anyway, start looking for those things. Comment if you're watching right now, or comment on the replay if you're watching the replay. I think I got that out of me, okay? But I just tell you that I'm really concerned. Actually, let me just say one last thing. What causes a run on a bank, right? Fear. somebody fears that their money's going to be out. A lot of the monies that are moving around out there, they're not $250,000 plus. They're small depositors that everybody's, scared. But also, just to be truthful, is that the bankers need to pay up to get their deposits. They need to, they're going to have to give up earnings. There's going to be a transitional phase here. And I will probably go into a situation that I've been talking about with the C changes, and I talked about it last night, but there is going to be, rates are going to be higher, not for longer, but for way longer than people think. And I know there's a lot of you, maybe folks that have been around for 20 years, think you know how it works. That's not how it works. We're going to go back to probably more of the mentality of the Fed in the 70s, 60s, and 70s is my theory, and that they want out of the business of controlling interest rates. They want the markets to control interest rates, and they will adjust the Fed's policies accordingly and react to crises. And that's what everybody's asking them to do. And probably my brother had the best analogy when I was talking to him a couple of days ago, is everybody's saying how the Fed, if they did it, they shouldn't be doing this, you got it wrong. It's like taking the keys of a car away from a 16-year-old. He's going to tell you, hey, Dad, that's not the way to do it. Well, you could just punish me here. Don't take my keys away. And all of the real estate guys, all the guys that have big interest rate exposure, they're the ones, those are the crybabies. And I said this before, the real estate sector is going to get hammered. CRE has a lot of issues. There's trillions of dollars of loans that have to be refinanced. We'll see how this all plays out. I suspect there's going to be a lot of extend and pretend strategies going on out there. Okay, I'm ready. Let's get into tonight's video. I needed to get that out up front so I could kind of get a little bit of normalcy back into my normal thought. Let's look at yesterday, and there is a number out there. It means a lot to me personally, and it's productivity. Productivity was down 2.7%. And that's a disaster. I just wrote my notes here, says disaster. These are really, really bad numbers. And a lot of this is being happening because of labor cost increase. We're still seeing that increasing, and it just stinks of more inflation. And everybody can call Powell and do everything, say whatever you want. They shouldn't have raised rates. They should have. And I'm going to tell you right now, they'll probably raise them again in June. I would expect another 25 in June. I don't see, okay, so crude oil came off down into the 60 handles. So what? That's not everything. That's a lot, but it's not everything. And these labor costs continuing up, all that stuff is going to be an issue. Productivity is key. That's the magic multiplier for GDP, okay? All right, so let's get in. Yesterday, claims came in as expected, in line. 242, expected 245. We had continuing claims actually dropping to 1.80 and change on a million. That's the lowest number we've seen for a while. And I'll just tell you, if we were the recession, I'm doing air quotes, right? If we were in the recession, a recessionary claims number is north of 350, around 345 plus. Is the magical number for a recessionary number on claims. We're nowhere near that. And really we're just kind of stable here. We've been at the same levels, but the continuing claims have dropped from, I think, I'm going off memory here, but probably 2.3 18 months ago down to 1.8, and it continues to be just gradually ticking down 30, 40,000 per week. So it's still coming down. And of course, we saw the JOLTS numbers come in, number of jobs out there, all this stuff. So finally, we'll get into the employment coming out in the morning. And I'll talk about Apple here in a minute as well. But the claims, the employment is expected to come in at 180. We saw a little better numbers, ADP. They're really not correlated, but 180. Last month, it was 260. So maybe somebody could argue it's softening, still 180. This is employment's looking at 3.6, up 0.1, and consumer credit also comes out. They're expecting to see a fairly decent increase here, 17.5 billion, and the previous was 15.3. That's a pretty big increase, and there'll be a lot of speculation around that. But yesterday, we did something I talked about early in the week, and certainly in the last couple of days, is that we got into that 60 handle. We got into this level on the S&P. If you remember, 40.80, 40.60, we bounced out of there really nice. Those of you that have the indicators, and you saw that hourly turn, I got distracted. I was going to tweet it out. I really wasn't on Twitter much at all today. I was more active yesterday. Just kept getting slammed with things throughout the day today. But I was going to put this out. We saw this hourly turnaround. It happened right after we were printing right into that 60 handle, and it just rallied all the way to 97. Then it came all the way back, I think, to 70. There were some great trades in there, and the 5-minute algos were all over this thing as well. So hopefully you folks that have those caught some of those things. Give me a thumbs up or something if you participated in any of those. There were both rallies, sell-offs. You could have played both sides of this thing. It was pretty methodical, especially with the webs. We're putting out classical patterns. Anybody that's been in the live room, I don't talk about those, normally in, during the night session. Sometimes they'll be up on the screen, but the point is that there was some great swings in there today. There was something else I wanted to discuss with you. Maybe it'll come up through the thing. Let's go ahead and take a look at the database, and we'll talk about, it's coming into Friday, so we'll talk about the intermediate database and what all that means, and we'll move forward here. So yesterday we were at 35% bullish and change. We're now at 33.94. We had 914 sells versus 354 buys. So we had a little negative rotation, and you'll see both on the 1.2 daily here and 3.2. We both had negative rotations here on that. But so we're down to 33. I talked to you about this last night. 28% is really the next number to watch. And it looks like maybe we're starting to stabilize. We'll see how tomorrow is. And I remember what I was going to talk about. I'll do it here in just a minute, but remind me to talk about Apple. And I was going to name tonight's video, Can Apple Save the Market? But I had to get after the Vigilantes here before I went on. But the bottom line, the bottom line is we come into Friday. My expectation is we could see a little bit of selling. I'm gonna pop up the intermediate database here real quick, and you'll see here it's at 65.75% bullish. We may see a little bit of selling coming in. I don't think, depending how if we finish up over in the 41 handle tomorrow, we'll talk about the technicals here in a minute. But if we finish up over that on tomorrow's close, then there's probably not going to be a lot of negativity coming into the weekly patterns. In fact, it might actually be more positive than negative. I saw somebody comment on Twitter today, something about, I said, so the title of the video last night, what's next? And he goes, you'll keep being bullish. And so this database has guided my career for 25 years and a lot of institutional money managers. So yeah, we live and die by this thing for sure. And it's still very positive on the intermediate. The short term is backed off, and if you go through, it's interesting. If you go through and look, if you're a Wavetech user, go through and look at the financials, you'll see we don't own very many financials. In fact, most of the financials we were getting out of in January and mid-22 last year. So we haven't really held any of these to speak of. If you look at right now, the sectors that are on the screen here that are long at capital goods, conglomerates, consumer cyclical and non-cyclical technology, transportation, utilities, you can see financial is out, and I'll just flop over to the research here for a second just to look at that. And you can see the last signal we had was back in 22. We haven't been in financials on a group basis for a while. So this is really kind of telling that you can see how choppy it was. And in real terms, you'd think this so-called banking crisis that everything's plummeting. If you look at from an index standpoint, we got back to where we were back basically in last year from an index standpoint. Now this is our customized index on this, and you just don't. It's not a collapse. You'd think we were doing like we did in 2020. You can see this massive collapse here, and then the rally back. This is a giant sideways consolidation range, folks. And this is all of the elements, right? So if I go back over here to research and come over here and look at financial, you'll see it's interesting that consumer financial services is long on. There was a buy on insurance that just came in, insurance miscellaneous. But I want you to notice something. The consumer financial services we've been long 14 days. We're up 2.4%. Not big, but it's positive. It's green. Insurance is up 8.33% in 23 days. So some pretty crazy numbers. So if you're looking at financials and trying to package everything into one, you're making a big mistake. But just coming back up here real quick is what I'm looking at for you institutional users and people using Wavetech or PortfolioXpert. We're just looking at a moderate rotation, maybe slightly negative, but I don't expect much on the intermediate level. So we'll continue to see a lot of those models remain. And I think I mentioned this, our average strategy that's out there right now has about 20 to 30% in cash. In some cases, it's closer to 40. So it's not like we're over the top bullish. There's still a lot of protection that's in a lot of these portfolios. There's some, depending on what you pick, might be a little more, but I doubt it. I would say most portfolios are 30 to 40% in cash right now. So the fact I went through that scenario the other day, if you're 65% of your symbols are long, if you have a portfolio of 20 symbols, you're looking at about 13, 14 of those symbols actually long, and the rest are not long, and therefore there's that 30 to 40% in cash. So we still have a protective stance and participating in some moderate sideways range, and the way you do that is through individual stocks, not through indexes. You can make money trading indexes, but this is a much different viewpoint. All right, so let's kick off with the S&P 500 as always. I wanted to show you something. If you folks remember last night's video, let me broaden this out just a little bit. We were sitting over here. This was around the time where we started to rally. So we should rally right into London. Right here is where London came in, and then I didn't know what we were going to see. The algos were projecting last night that we would start to decline. We did decline into these lows that we saw today, and we printed a low of 40.6350, And then there was another low that came in at 40.6225. And this was the reversal. And if I were to run the script, this bar here was signaling that the next bar would be the low bar and we would start to rally. So we did. And then we went up to the 21. We got rejected. We came back down. We set up a perfect right shoulder here. And now we're setting up a bigger pattern. But it does look like right now we're very close to just flattening out. And there's still, you notice that let me make this a little bigger so you can see the current. You can see the downslope in the moving average. So there's still an angle of attack to the downside. So we're probably going to go into a range, probably stay within the market grid. If you've got the indicators, use the hourly chart and watch closely these ranges if you're trading overnight. So that looks like the patterns that should continue. The one interesting feature here is that we do have some upward fib targets right now. 4104, 4120, 4131. We're going to go to the daily, look at the market grid for the daily, and we'll see what's setting up there. I've got to switch over this contract here. So looking at the daily, we printed down even on a closing basis yesterday under that 40 period moving average. And we're seeing the moving average is really hard down here. It looks like maybe the resistance is going to be around 41.26, probably in line with some of those fib targets. We'll look at the market grid here in a minute. We'll look at it. If you notice, because of the volatility we've had in the last several days, market grid is very, very wide. So to give you an example, STX tomorrow is 4,004 and RTX is 4147. So we're looking at a very big range, and that's just because of the volatility that we're seeing. There is some fib targets that are coming in. This is a new fib target here, 4076, which we've exceeded, 4027, 3996. And that brings us down to this 200-day moving average. I've discussed this several times. And this is a potential. And I mentioned last night that the 39 handle is becoming more realistic. If you go back a couple nights ago when I did the quarterly, the long-term analysis, quarterly, monthly, weekly, if you look at that, there were a lot of things pointing to 39.50. That's a very strong possibility that we could see those kind of numbers in here. And once again, all that's really going to be, is going to be more of what we've been doing for a year. This market's been back and forth like this for a year. And I promised you I would do the midpoint, and I didn't get it done. But the last check, and we really haven't made any moves out, that was 41.14 was the midpoint of this range. And that is exactly what's going on. I see Donald Trump's getting thousands and thousands of mutual funds, and all regional banks are dropping like a stone. Well, if you want to buy low and sell high, that might be something to look at. I think the word is have dropped. Okay. So anyway, yeah, there's still some downside here. I'm being a little sarcastic, but yeah, there are thousands and thousands and thousands of them. You're right. And right now, what we're seeing in all of these patterns is a sideways movement. I bet if you looked at a bunch of those mutual funds, they've been in the same range for a while. And that's just how the market is configured right now. Is it going to break through the bottom? Don't think so. Time will tell. I still, like I said, I live and die by this intermediate database that has guided me and lots of others for a long time. As a matter of fact, roughly $275 billion. So a lot of folks have have a little bit of faith in this. Right now, we still actually run about over 15 billion in the market. So there is a lot of money, but like I said, we've got protection. We got 30-40% in cash right now. And individual stocks are always your best bet. Mutual funds are 100-year-old technology, and ETFs, there's a lot of very, very poorly run ETFs out there. So be careful what type of managers. There's some really good managers out there, but there's some really bad ones like Kathy Woods and other folks like that. They're just not very good at what they do. And I don't know if Kathy will ever get out of the 30 handle on her fund again. I guess having said that, maybe she will, but maybe she'll go to the 20. But the point is that this pattern is what's been going on for a very long time. And the indicators aren't in any kind of crash mode by any means. But there is some downside risk. 3950 is a real number. And, we'll see how these things act. Like I said, I don't see any big turnaround. I don't think Apple is going to save anything. There's a little bit of a bid in the market right now. We'll see if we can trade. We'd have to trade up over about 41.25 to really get some serious short covering coming. We'll see what sets up tomorrow. Hopefully I'll have some time for Twitter tomorrow. So if you're following me on Twitter, just watch there. And if you're not, it's Twitter. It's at PortfolioXpert, and there's no E in the expert. So Joel Taylor, were you able to borrow stock? What broker-dealer? And when did you get short? Anyway, all right, let's go on and get to the NASDAQ, see if we can get through tonight's video. All right, so it continues. Yesterday, S&P down 0.72, NASDAQ down 0.49. Russell gave up some of its overperformance, down 1.18. So, but once again, the NAS is running the show, and here we are again. I told you last night to watch this simple 10. Here's the daily simple 10, 12,687. Last trade 12,788. We're going to hover along that upward slope here, and so don't get too bearish. We do have, as in the S&P, we have some new fib targets that came out today. So those are to be respected as well. Downside targets 12,871, 12,680, 12,560. So those are new numbers that came out of today. But this upward slope, in fact, if we were able to continue to close slightly higher tomorrow, we're going to break back above first, second derivative on the indicator on PPM, just confirming that we're going to continue along this slope. And it's not a steep slope, but this is going to be a support line. And you can see the last two sessions, we're riding right along that line. We'll see how it plays out tomorrow. I would suspect with a reasonable bid, maybe in Apple, I think they beat on top and bottom line, so everybody's probably fairly, I don't know, bullish, but positive. We'll use that word. So here's the Russell. Russell still kind of, yesterday got down, rallied back about the midpoint of the session. Now we're sitting here right now at the upward pattern. And I realize with everything that's going on tonight, I did not give you guys a good market grid number on the S&P. So I don't want to confuse it and put it here. I'll tell you what, I'll put it out on Twitter. So follow me there and I'll put those numbers out. All right, so the Russell, I talked about this last night. This is probably Monday is a potential turnaround day for the Russell. And let's face it, the Russell actually fared fairly well considering that they were still beating down the regionals and the community banks for today. But the bottom line is it looks like we're probably 1, maybe 2 days. Monday should be the point in time where it's going to try to rally back towards this 10-period moving average, 1753. Last trade right now is 1729, so it's not a big deal. And most likely what I would like to see is a higher close today when we get pricing on Sunday night that we see the market grid turn up. And we got right down the lows here on the spike lows was 1708 back on the 20th of March. Then we had another low here on the 24th, which is 1703, and we printed 1707 today on Thursday. So we come into Friday, just look for probably on all of these. I'm looking for around an S1 R1 minimum, and if we get some volatility out of this thing, we could see S2 R2 tomorrow on all these indexes. So those of you who have the indicators, just use those numbers as guidelines. So let's look at the interest rates now. So we kind of spiked out on the interest rates as well today. And we're looking at, we printed all the way down here on the 10-year down to 329.6. Yes, this is the market grid was 330.02 was RX STX. And so we went right to it. There was also a fib target number at 3.282. Went to there, bounced off of there, closed at 335. But you can see these moving averages are monster downtrends here right now. We'll see how this thing plays out in the next couple sessions. It does look like the PPMs are going to try to turn up in the next couple sessions. So, but the cap is going to be the 200 right into this. There's a cluster. All the moving averages are pretty much clustered together right now. The 10, 346. The 21, 346. The 40, 349. And the 200, 3.54. So that's going to be an absolute ceiling at the moment. I think the downside is probably around where we printed today, and look for some yeah. So yeah, I'll tell you what, I will, if you hang around to the end, I'll put the market grid numbers up. Okay, I'll do it. I got your back there, Larry. Let's look at the 2-year. Similar yesterday, we got down to just about the STX 3.61, the low 3.65, close 379. So we right in about the middle of the session, just above, we closed above that fib target. There was a fib target too at 358. So this is actually live trading here on this one. And so we're pretty much flat right now, but there's a ceiling here around the 390, 395 level. So it's interesting. Some of these markets, it looks like crude oil may have just done a spike here, and that looks pretty climactic. The algos are trying to turn up, so we're still going to have lots of resistance here. We're right now at the 68.85. What was that low here? We got down to 63.64. That was ridiculous. Maybe they're buying the strategic reserve back this time. That's what they said they'd do. If they were to do that, I'm going to have to take my hat off to pretty good traders. They sold it down, but they got a lot to buy to get back to even. So we'll see exactly what's going on here from this standpoint. I would say start the popcorn again. We'll go. I'm planning on going through some of these bank stocks at the end after we get through Bitcoin here in just a couple minutes, and then maybe we'll talk some other stuff here as well. So I see somebody, Trevor. There's some videos on training on the indicators you can watch. There's a couple like long streams, maybe 2 and 3 hours if you have the stomach for it, that's out there, and there is a complete class that comes with it. So here we are at this crude. That was an impressive spike, right? So we're looking at this market starting to maybe formulate some kind of bottom. We may get one of these bubble bottoms like we did this basically over here when we got down here to March. So we took out the March lows. The lows were 64.38, and today we printed by, say, 63.64. And I'm a big advocate of situations like this of buying that new low. I mean, people that are selling in a hole like this are crazy. That evidently happened today. That's why you see this big spike. Everybody is probably half of this rally was short covering, but in the end, that price, that's a very climactic looking pattern from this standpoint. And what we should see on Sunday night when we come in is that the market grid's turning up and maybe starting to form one of these patterns over here. Let me just draw something up here very quickly just so we can get that. So let me show you where the patterns are that I'm talking about. So we're looking at here and then expecting maybe another pattern of this sort where you're going to see, just kind of a V in here and come back into these averages. Back in the time, the averages were all down pretty good. These are about not quite as vertically down as they were then, if that's a word, vertically down. Just going down as hard as they were, the momentum was much lower. So we're seeing not as much downward pressure on this sell-off. So there's a good chance we come back into these averages and we get it back into these ranges that I've been talking about for a while. And that would be kind of in that lock-in range here around the back around 74, 76 range. We should come back into these averages here. Basically, the market's way out of balance. It's like probably a standard div and a half away from these moving averages. They're going to pull back in. You can see when they get way out, they come back to the averages. And then once we start to see stabilization, the algos on this are suggesting that we will see that stabilization similar to what we had over in this previous period in March. And interesting enough, they're related because this was a banking sell-off because remember the economy is going to come to an end. There's going to be no demand and all that. And here we are again, same kind of print. And, if you look at everybody on the planet started, once they got short supplies of energy, they went back to coal. Look at what Germany's done. A bunch of folks are grabbing at LNG, coal, everything they can find. And now things have maybe stabilized a little bit. So now they're backing off again. And then the green green stories coming back out again. And we'll see, then that puts us back at another shortage. Not shortage, but the supplies start to come down a little bit as we go forward. And we're coming into, folks, it's May. We're a month away from U.S. Summer driving time. So we'll see if there's going to be increased demand from that standpoint. Gold just wants to keep going higher. It's pretty impressive, actually. What we're looking at here is we traded above RTX yesterday. RTX was 2072. We printed 85, sorry. And now we're coming back in at the moment. We're back in at the 60 handle. Yesterday we went out at 55, so we're up a little bit from there, but the peak of these values are there. But as I was talking about last night, we're going to continue to climb. This upward line tells us that the channel will stay positive, and we're looking at anywhere from 3 to 8 days out right now on these predictive. This is what the pattern looks like. We're going to continue to go up, and I'll just show the weekly for a second here. Weekly is about, if we stay above on tomorrow's close, if we stay above 2049, we're going to get an RTX sell signal, which means we get 1 to 2 weeks sideways. But if you look at, I talked about this a couple nights ago, is that we got to the 85 low, the 10-week moving average, simple 10 was 1975, but this is also is being projected to be a climactic bar. So if you were to buy here, I don't think it'll work out real good for you, but we should stay above this line, which right now is going up. It's going up about $12 plus per day. So it's at 75. That'll be 87.90 as we come in. So 1990 will be the support line. But we should have an upward projection, and I suspect if we close here tomorrow that we will see the market grid turn up a little bit. And typically in a RTX sell signal, you're going to print the S1, S2 levels on the next market grid. That will be your sideways movement. And depending on how the market grid comes out, the S1 number could be flat, maybe even up a little bit, and the S2 number is probably the more likely target then. Yes, did Levi show up? Thank you, mods, for doing that. Appreciate it. All right, we'll hit Bitcoin, and then I'm going to hang out with you folks. We'll hit Bitcoin. I'll hang out with you folks, and we'll do a few bank stocks. So get ready to give me your favorite bank stocks. There was somebody said they were short some stock. They're going to wait to the earnings come out. Like to look at that one for you. Hang on, it's coming up. Bear with me. All right, so Bitcoin, as I've been talking about, it's very similar to the gold pattern, incredibly similar, actually. And what we're looking at is we're just trading right along this same uptrend. We've got a couple more days. It looks like Friday, maybe Saturday, we've got a little flattening coming out, and maybe we're going to roll back in. So the moving averages are showing that we're going to go back in, and just since we're coming, this is weekly, by the way, that we're looking at. And so that should happen. Actually, that would mean that we have another positive week before we start the roll. Let's look at the daily. And daily is still got a really good upslope here. So it looks like we've got several days looking ahead where the PPMs are supporting that we're going to stay along this 10-day moving average, 28,984, going up about 120 per day. And we've got new Fibonacci projections that came in, and those numbers are 30,707, 31,869, and 32,586. So that is the new upward projections as of today, and we have this upslope line. So just pay attention to a simple 10. That'll be your buy points and your support line as we should move higher for next probably through the weekend, it looks like. Okay, folks, so I'll come up on screen here for just a minute. What we'll do here is I'll look for some of these symbols. I'm going to get something so I can write down some of these so I can just kind of go through them. I'll do about 4 or 5, okay? But there's one OCFC, I think, is one that somebody put up. SoFi's not really a bank, but SoFi, we can look at it. PNC, yeah, there you go. Yeah, I got that, Joel. KRE, yeah, we should look at KRE. Yeah, so Dario, just real quick comment on yours. Yeah, we should look at Schwab. Schwab has got some serious issues, and I've talked to some of my institutional clients that clear there. Maybe some of you are listening or will be listening on the replay. Is there's continuing to be a big issue here. I know most people think Charles Schwab is a broker-dealer. They're actually a bank. They turned into a bank a while ago, and it goes back to 2019, right before just a quick story. 2019, right before the pandemic started in November, actually, Schwab had an institutional conference. I was there. This is when they announced they were going basically no ticket fees anymore, no transactional fees, and they were going to start to do fractional shares. I don't believe they've even done fractional shares for institutional accounts yet. I think maybe Fidelity has. I'm unsure about that. But Schwab did that because they were the only, I guess, broker out there that did not have exposure to ticket fees. So when they made that move, TD Ameritrade dropped 25% in value because that was material. But guess what? They had already, and it was about 6 to 8 weeks after that event that I'm talking about, and the TD dropped. Guess what they did? They announced they were buying TD. This deal was inked a year plus before that happened. None of these big transactions like this happened, and it's taken them maybe 2 years to finally get to the point they're going to roll everybody out of TD and into Schwab. And what timing as they would have it right into this banking situation. So we'll do that. So here's the deal. I'll go off screen here, and I'll just cover these things. And yeah, just looking here. Yeah, so I have not been looking at some of these heavily shorted stocks, but I could tell you that would be a good thing to do. And I meant to do something earlier, but we still have like 250 plus live here right now. But I'm just going to say this before I get into the rest. But I'm looking for somebody who wants to work with my channel. And what I'm planning on doing, I do these hour-long streams. I would like to start cropping out the S&P and NASDAQ and start to crop these up into little pieces. And I'm looking for somebody who wants to help me do that. I was on Fiverr today looking, but I thought, hey, I'll reach out to the community, and I have some compensation ideas if you're willing to do that. They need to be done timely after these streams, so keep that in mind. So anyway, if you're interested, you send an email to info@kendallreport.com, and hopefully we'll hook up if you have any interest. But it's something that's got to be done timely, and I've got to be able to count on it. So let's talk. Okay, let's get into these banks. All right, so what I'm going to start with here is, let's do KRE first, okay? Let's start at that level. And KRE spiked below, just came close to getting a STX buy signal. And we just, this is pretty ugly, folks. There's no doubt about it. So if you're buying into something like this, I don't see this as a buy yet. Let's go to weekly, because that's going to be the most important. So here's what's going to happen on a weekly basis. Is you can see this sharp downward moving average here. We're going to have to do a fair amount of work. Looks like we're going to get an STX buy signal weekly. That may help to set things up, but it does look like these downward pressure. This is going to take just on a weekly basis, and this is going to be across the board, folks, on most of these stocks. It's going to take multiple weeks to consolidate. Now, I had this conversation with you folks. I thought we were getting a bubble bottom here, and we had a shot at coming back into, this 49, maybe heading back into these moving averages, before this week, right? So this week has completely kiboshed that whole thing. And what we should see is it's going to take multiple weeks to recover from this. Okay, so let's keep that in mind from an index level. And Vitas, just so you know, if you could get me a symbol on that, it'd be a lot easier. I would like to look at that one. Yeah, I think Trader SLA, I think there's going to be a reasonable bounce, but you're going to be stabbing at the dark. You might have to even use like a hourly chart. So let's take a look at a couple of these so we can get through this and we can all get on with our evening. So let's start with Charlie. Actually, an interesting chart. Charlie's got down here. This is somewhat of a low level here, and the low that we got to was 45 even. We're printing 45.65. It looks like based on, we should start to turn around this coming week. So this could be one, but you got this major resistance right here. It's going to take a couple of weeks, but I would keep my eye on that. Let's go to daily just to take a look at that. Yeah, daily is still trading right down these moving average lines. Let me blow this up so you can see it just a bit better. And so you can see we got this sharp downward move here. That's going to be your resistance line, and it's going to take, we'll say, somewhere between 5 and 8 sessions to set up a pattern that maybe we can get a rally, and that will. So you'll want to look at both the dailies and the weeklies. The algos are it's interesting, aren't nearly as weak as they were here on this initial decline. So we are starting to see PPM3 is trying to turn up. PPM2 is already above first and second derivative. And we should, once we see PPM1 get above that, it's going to take a few days. But look at this. We also bounced. Not only did we trade down to STX here, we did get right to the fib target, 45.27, the low 45.65. So we hit fib target 1. Maybe we can get a bounce from here. We'll see what comes up with the general markets, with Apple and other things that are going on there. All right, so let's go next to, let's do the OCFC. Suggests that tomorrow could be a turnaround day, but we got a lot of overhead resistance, so your risk up on the upside is up to 1520. Where to go at it? 1340. So 1346. This algos are suggesting for the short term that we should get a turnaround here. And watch that very close if we hold the market grid number when it comes up for tomorrow. I don't know if you have the indicators. If you do, we should see the market grid turn up in the next couple of days. And looks like maybe these moving averages will still be resistance, but it's not going to be, there's not going to be any rocket ships off of this. This is not going to be a launching pad. This is going to be a consolidation pattern on all of these. It's going to take multiple days. Any chance that the Vigilantes get to come after these stocks, just know they will. And that, I talked about this, I think, a week or two ago. This was part of the conversation, that this thing isn't over yet. They're going to continue to use this story until it doesn't work. But there will be some opportunities here. Does look like this one's hitting some extremes. All right. SoFi is got to actually close higher and got a reversal pattern. This one has some potential to get back to these moving averages. This is the daily, so the massive range here. STX is 419 and RTX is 551. So just watch yesterday's high. If we print above that, should be able to buy against the low here that we made yesterday, and look for maybe a 2 or 3 day rally into this moving average. It is coming down, so that's probably the best that I could come up with there. Let's go to PNC. PNC hit right at the STX today, was 111.59, the low 111.84. So it came right into that number. These are fairly ugly charts. The only thing that's happening here is PPM2 is really looking, I wouldn't call it bullish, but it's suggesting that we're going to test this 21 period moving average here, and that's going to be key. But that number is at 123. So there's not, that's 10 handle move. That's a pretty big percentage move. But that, once again, this ain't going to happen tomorrow. This could be multiple days here. Let's look at the weeklies here as well. Weeklies are getting interesting. We came right up this week, the high 126.77, the 10 period moving average with a PPM ratio of minus 3.39. This is in parabolic range on the downside. So that SMA is going to, that 10 week SMA is going to be monster resistance, but we're getting potential for a STX buy signal to come in here. And that looks like maybe a setup for some kind of consolidation, but we're looking at multiple weeks here from that standpoint. Yeah, NFL, I think you're right. I think they were in the bidding there. Let's just look at a couple comments. Let's go. Yeah, I think this is probably a good point as ever. I'll just come back on screen here, folks. Thank you so much. Thanks for all your patience this week, me being late, and being out of town for a week, and all the stuff that's going on. Life is very dynamic. There's ups and downs, and there's lots of things to work with. I've got SST, Nikki. That's the one I wanted to look at. Hang on, we're going to go back and do that. Okay. And I owe the market grid too for, I will do that real quick before we finish. Yeah, okay. I don't know what this is. I thought it's not a bank, right? SST. Okay. All right. So let's do market grid here. We'll use the daily here. 1 second. Yeah, ES up 15 handles. Let's take a look at this. Let me move this up on screen so you can see it. Yeah, so I mentioned S1, R1 minimum. We've actually printed those numbers already. 70, not quite the S1. That would be a new low, and S1 would be a new low. But S1's in play just because that's the minimum downside. R2, 41.11.50, R3, 41.30.25. And when we were looking at some of those charts earlier, that's a big number around that, around 41.25, 41.30. I think that's a little extreme, but we could get some short covering before the weekend. And once again, they've thrown the kitchen sink at this thing, and that's going to be it. Yeah. So, okay, folks. I'm glad I remembered that because I promised I would do that. All right. So, final time back on screen. It's the weekend. Have good day trading tomorrow. Be safe. Probably going to be some volatility again. We've had a lot to digest this week, and I will tell you in closing that maybe I'm a fool, but I'm buying into what Jay Powell is telling us. He's telling us, I do believe the banking system in general is solid. I don't see it being at risk. I don't see 2008. I do see issues around some of these regional banks, but I can tell you this, if it wasn't for the dialogue, I won't go into the vigilante thing again, but if it wasn't for the narrative that's being played out there and this whole idea of how many assets aren't guaranteed situation, then, why didn't somebody talk about that 2 years, 3 years, 20 years, 100 years ago? Because they've never been, so yeah, it's just a really silly narrative. I'll use the word silly, but yeah, we probably should have looked at Apple, but I think Apple's Apple. It's going to be it's a bellwether, and whether that can move the markets much higher, that's certainly why there's a bid in the ES right now. That's why we're trading up 0.38 on the session. We'll see if we can get any kind of traction. It looks like there's a lot of resistance out there, folks. I'm looking forward to see what kind of print we get on our database on the intermediates, all that kind of stuff. And I'll be around Sunday night. I will tell you, I'm trying to think what day it is. It's very possible this next Thursday night I won't be available. If that happens, depending on the circumstances, I will possibly do a live stream day Friday. It just depends on what. There's a pretty Thursday's a pretty dynamic day for me from a personal level. So we'll see how that goes. But Sunday, Monday, Tuesday, Wednesday should be fine. Just Thursday could be in question. So, but I am going to start at 10 o'clock Eastern time, and that's going to give me a little more probabilities, and I'll do my best to be timely. So I appreciate those who've been hanging around and watching and putting up with my variable starts this week. So thank you again. All right, folks, have a great day trading. We'll see you on Sunday night. Before you leave, hit that smash. There's only 163. There's 252. See you. Thank you, Carly.